Limited, assets H Limited and S Limited. Share capital, shares of this 10 each, 5 lakhs, 1 lakh. Profit and loss account, 2 lakhs and 60,000. Reserve 60,000, 30,000. Bills payable dash and 15,000. Creditors 1 lakh 10,000 and 60,000. Fixed asset rupees 4 lakh, 60,000. Stock 3 lakhs, 1 lakh 20. Data 75, 85. Bills receivable 20,000 dash. Shares in S Limited 7,500 at a cost of 75,000. Additional information: the bill accepted by S are all in favor of H Limited. That means there is intercompany owing. The stock of H Limited includes 25,000 bought from S Limited at a profit to the latter of 20% on sales. Similar to problem number 10. All the profit of S Limited has been earned since the shares were acquired by H Limited, but there was already the reserve of Rs 30,000 at that date. That's it. Now what he is asking us? He is asking us to prepare consolidated balance sheet. You can see the first two lines from the balance sheet. From the balance sheet and information given below, prepare consolidated balance sheet. Means a balance sheet where you need to consolidate the information relating to the holding company as well as subsidiary company. Now for preparing the consolidated balance sheet, first of all we need to determine the share. S Limited is having 1 lakh shares. Am I correct?
Yes.
No, I am not correct, because 1 lakh is the share capital. Share capital is 1 lakh rupees. Value of each share is 10,000. How many shares are there in S Limited? 10,000. Out of 10,000 shares, 7,500 shares are held by H Limited. The remaining 2,500 shares are held by minorities. First you have to do this. You have to find out the share of H Limited and share of minorities. Next, step 2, we need to find out calculation and distribution of revenue profit. Now, calculation and distribution of capital profit and revenue profit. Now, definition says any profit earned by the subsidiary company on or before the date of acquisition is called as capital profit, and profit earned by the subsidiary company after the date of acquisition of its business by the holding company is called revenue profit. That is on or before capital, after revenue. That's the rule. Yes sir. So you can see here in subsidiary company we have profit and loss account of 60,000. Yes or no? Yes. And reserves of 30,000.
Yes sir.
Two things are there. Profit and loss account is 60,000, reserve is 30,000. Now out of this, how much is revenue, how much is capital? That we need to find out. So how to find it out? Let's see. See the last line, like bit number 3rd you see. Third, all the profit of S Limited has been earned since the shares were acquired by H Limited. What does this sentence mean? What it indicates? What does it mean? You tell me. Then afterwards I will tell you.
जितना भी profit H Limited acquisition के बाद provide करा वो पूरा H Limited.
What does it mean? Whether the profit is capital or revenue?
Acquisition revenue.
Capital.
Capital. You see, all the profit of S Limited has been earned since the shares were acquired by S Limited. That means whatever the profit is earned, it was not earned before, it was earned after.
Revenue.
After means what? Revenue profit or capital profit? Entire profit is revenue profit. You need to understand the sentence. All the profit of S Limited has been earned since the shares were acquired by H Limited. That means whatever the profit is given to you, whatever the balance is given to you in your profit and loss account, it is entirely what's the revenue profit. Because such profit was earned by subsidiary company after the acquisition of its share by the holding company. Obviously, it's a revenue profit. Yes or no? That's it. Acha. But one more term is there. But one thing is sure, profit balance in profit and loss account is revenue. We need to distribute it between holding companies and minorities. The next, but there was already reserve of rupees 30,000 at that date.
Capital.
That date means what? On the date of acquisition of its business by the holding company, the subsidiary company was having reserves of rupees 30,000. It means what?
Capital.
It means that whatever the reserve is given to you, 30,000 exactly. In the balance sheet also the amount of the reserve is 30,000. It is capital. Because the reserve was created before the acquisition of its business by the subsidiary holding company. So this reserve was created by the subsidiary company before acquisition of its business by the holding company. Therefore, this reserve is what? It's a capital. So three workings you have to do. First, share of holding company and minorities. Then calculation and distribution of capital profit. Then calculation and distribution of revenue profit. Over. Then minority interest. Minority interest, how to find out minority interest is paid up value of shares held by the minority shareholders we should take. Then share of minorities in the revenue profit, share of minorities in the capital profit you have to take. Add three things, minority interest. Where do we take minority interest? We take it on the liability side, under the head shareholders part. The next, we need to find out goodwill or capital reserve. Goodwill or capital reserve. To find out the goodwill or capital reserve, we need to first find out the paid up value of shares held by holding company. The next, add share of X Limited in the capital profit you should add. Then you should deduct the amount of investment made. If the investment made is more than the paid up value of shares, then it is considered as goodwill. If the investment made is less than the paid up value of shares, then it is considered as capital reserve. Goodwill appears under the head intangible assets. Reserve, capital reserve appears under the head reserves and do up to this stage. 5 workings you have to do. Ascertain share, capital profit, revenue profit, then minority interest, then goodwill or capital. 5 workings you have to do. Start with. From S Limited at a profit to the later of 20% on sales. You know, one company is selling goods to another company. Maybe holding is selling goods to what subsidiary, or subsidiary is selling goods to holding company. Usually when one company sells goods to another company, they charge a certain amount of profit. So here also, the stock of X Limited includes 25,000 bought from S Limited. X Limited has bought goods worth rupees 25,000 from S Limited at a profit to the later of 20% on sales. The profit is charged by the subsidiary company is 20% on sales. So what we need to do? We need to find out that 20% profit on sales. That profit is called unrealized profit. Such unrealized profit should be deducted from two places. Number one, it is to be deducted from stock, inventory on the asset side of the balance sheet. Similarly, it is to be deducted from reserves and surplus on the liability side of the balance sheet. So unrealized profits to be deducted from two places. Number one, it is to be deducted from inventory. Number two, it is to be deducted from reserves and surplus. So I am ascertaining unrealized profit just to see. Calculation of unrealized profit. You know, cost plus profit is equals to sale. Am I correct?
Sir.
Cost plus profit is equals to sale. In a given problem, profit is given to you as 20% on sales. See that in different number second. The stock of S Limited includes 25,000 bought from S Limited at a profit to the later of 20% on sales. The profit is 20% on sales, means sales is 100%. If sales is 100%, profit is 20%, cost will be how much percent? 80%. So here, this stock of X Limited includes 25,000 is given to you. This 25,000 is always, or in this value?
Sir,
Nothing is given in the problem. He says the stock of S Limited include 25,000 bought from S Limited at a profit to the later of 20% on sales.